Another decade, another economic crash. When will this stop happening? What's up everybody, I am Jasprit Singh and welcome to the Minority Mindset. Economic crashes have happened for centuries. In the 1600s, when Turkish merchants brought over tulips to the Netherlands for the first time, the Dutch fell in love. But I mean, what normal person wouldn't love a tulip? They're so pretty. Tulips became sort of a status symbol in the Netherlands, and that's when the French heard of this tulip flower and they wanted to plant some of these pretty flowers in their gardens too. Well, when the flower merchants found out that there was more people that wanted to buy tulips because now the French wanted tulips too, the price for tulip bulbs went up, and now you had scarcity around these tulip bulbs, the seeds, and everybody wanted to get their hands on these tulip bulbs. I want tulips. It got to the point where people were literally buying tulip bulbs not to plant them, but to hoard them because these tulip bulbs were a great investments, and at the peak, one tulip bulb was worth as much as a house. Eventually, this tulip bubble crashed, and the people that sold their house to buy a tulip bulb and spent everything they had to buy a tulip bulb and went into debt to buy a couple tulip bulbs were left with nothing except a couple really pretty flowers. This bubble was called Tulip Mania, and it was the first recorded financial crash in history. Now we're in 2020 and nothing has changed. Except you can buy tulips off of Amazon for just a couple bucks, but besides that, bubbles keep forming and then popping, and economic crashes keep happening, which is why today I want to talk about economic crashes, why that happened, and why they will continue to happen in the future. So make sure you watch this video until the end because you want to know how you can capitalize on these economic crashes instead of getting abused by them. But before we get into that, pop that thumbs up button below, because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel, that way you don't miss our new financial education videos every single week, and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. In the words of Warren Buffett, bubbles happen because people see their neighbors who are dumber than they are get rich. When did Bunty buy that Gucci scarf? You start with something simple that seems harmless, like a tulip bulb, and then people hear that it's the new hot thing. That's when investors and merchants start making a ton of money just buying tulip bulbs, holding them, and then selling them for a huge profit. But there's not enough tulip bulbs to go around, see? And people don't want to spend all their time trying to find a buyer for these tulip bulbs and then find a seller for these tulip bulbs. It takes too much time. Plus, people want to be able to leverage their bets. That way they can make a whole lot more money with their tulip bulb investments. That's when people get crafty. So investment firms come up with fancy ways for anybody to be able to get their hands on this tulip bulb investment without actually buying or touching a real tulip bulb. And so now you can buy these paper investments or derivatives of the tulip bulb, and if you think the price of tulip bulbs are gonna go up in 2 months, just buy this derivative, and if it does go up, you're gonna make so much money you won't even know what to do with it. Now the speculators start salivating because the next big thing is here, so let me get rich too. That's when the speculators, who have no idea of what a tulip is, want to get into this business because they see how fast the price is going up. So now they sell their house, they go into debt, they risk everything to be a part of the next big thing. This makes the price of actual tulip bulbs soar, and now the merchants holding on to these tulip bulbs are scratching their heads thinking, well, this doesn't make any sense, so maybe we should sell some of our tulips. Anybody want to buy some tulips? That's when things flip, because merchants now hold an auction to sell off their tulip bulbs, because who wouldn't want to own these awesome investments? And they're selling their tulip bulbs at fair market value, the price of a house. And nobody shows up because people don't want to pay that much money to own a tulip bulb. And that's when the merchants realize, oh no, these tulip bulbs are worthless. People were just investing in tulips because they wanted to get rich. And that's when people realize, I sold my $100,000 house to buy a flower? And now people start panic selling their tulips and their tulip investments because they want to get whatever cash they can out immediately. And now, ladies and gentlemen, you have just created a boom and bust. A bubble came, some people became unbelievably wealthy, and then the bubble popped and people lost everything, and the economy was just reset. Now, what I want you to do is rewind the story and replace the word tulip with .com companies in 2000, real estate in 2008, Bitcoin in 2017, and the stock market in 2020. It's all the same. Although this 2020 crash is a little bit different, but I'll get to that in just a little bit. The economy and every asset class moves in cycles. So things will start going up, and that's when the speculators start coming in thinking, wait, is this the next big thing? Can I get rich overnight? And people start buying, and things go up. And eventually you hit a peak where people think, whoa, this is a little too good to be true. So people start selling, and when things start coming down, that's when people get scared and they start panic selling, and things come down until people poke their heads out thinking, wait, these prices are too good to be true. And then people start buying, and then you reverse the cycle and start all over again. Now add to that funny paper money that can be printed with the click of a button, easy leverage, and tons of derivatives, and now you will have higher highs and lower lows. I'll show you what I mean. I've said this at least a dozen times now, but our paper dollars, our cash, aren't backed by gold or silver or anything tangible. They're just backed by a promise from the United States government that our United States dollars have value. And so that makes it very easy for the Federal Reserve Bank to print an unlimited amount of money. Couple that easy money with easy leverage, and now regular people and the big dogs can leverage up their investments 10 times or 100 times. This way their profits are a whole lot bigger, and this will inflate the bubble much bigger. But that's not all, because we want everybody to be able to have some fun, and that's when you see the creation of tulip derivatives. And now what you can do is, instead of you going out and buying tulip bulbs yourself, you can just buy tulips or invest in tulips on paper through tulip ETFs and tulip futures and other tulip contracts, and now it's easy for anybody to get involved. These three things put together, speculation, leverage, and easy access through derivatives, make higher highs and lower lows. The downfall is that if the underlying asset, in this case the tulip bulb, becomes worthless, now the whole financial system collapses. We saw this happen to an unbelievable level during the 2008 real estate crash, because first people believed that real estate could never come down in value, and then you had an unlimited amount of leverage, and then on top of that you have derivatives on top of derivatives on top of derivatives. And so when the underlying asset, real estate, crashed, the whole system crumbled. Speculation fueled with easy leverage and the desire to get rich quick is a deadly combination. But if you understand this system, you can use it to your advantage. That way you can be the one becoming wealthy because of it, instead of being the one that loses everything. And we'll be talking about that in just a second. Going back to what I said in the beginning of this video, Warren Buffett says that bubbles happen because people see their neighbors who are dumber than them get rich. Now just add to that easy leverage and their desire to get rich quick, and yeah, now you get really big bubbles. Ooh, bubble. Whoop. Oops. What ends up happening for a lot of people is they see something like tulip bulbs, and you can replace tulip bulbs with whatever asset you want, it doesn't matter, but they see something like tulip bulbs rising in price, and they think, wow, people are making so much money on this, but I'm not gonna fall for this. So they just sit back and watch. Then a few weeks go by and the price of tulips went up even more, and now your dumb annoying neighbor keeps bragging about how he bought 5 tulips years ago and he's a millionaire. And you're like, maybe I should be a part of this, but no, it's too late. I'm not gonna do that. Now a few more weeks go by, and you'd think that reality would hit by now, and yeah, tulip prices did come down a little bit, but then they shot back up, and tulips are worth twice as much as they were before, and everybody keeps telling you that tulips are the future, and they can't come down. Now you give and you start speculating, but then you think to yourself, I could put in a little bit of money, but if I just leverage up my investment, I could turn my $10,000 into $100,000 almost overnight at this pace, and now you go in with everything. Then before you know it, it turns out that your golden tulip, your ticket to getting rich, turns out to be nothing but a flower covered in manure. Crap. When you least expected it, boop, the bubble popped and things came crashing down. The majority of people will hear this and they'll say something like, oh, this is why I will never invest my money. I don't trust anyone. I want you to think different than the majority of people and learn how you can use this system to your advantage, because the people that make the real money are the people that understand tulips and know how to stay patient. And kind of as a funny aside, tulips have been my favorite flower because I like the way they look. but it's just kind of fitting how they're also kind of a symbol of financial education. When the whole world is talking about how an investment or an asset class can't come down, that's when the financially educated start to take some small steps back to see what's going on in the bigger picture, because when that bubble pops, that's when it's time to attack, because now you can buy great investments at huge discounts. When you see people speculating on something that they don't understand with easy leverage, all because they want to get rich quick, you're witnessing a bubble, and that's when you want to take a step back, because you don't want to be on the losing side of it. Before I get into why this 2020 crash is a little bit unique, this is why financial education is so important, because financial education is what will guide you on the top, so you know when you should be kind of taking a step back, and it teaches you what you should be doing at the bottom. That way you can take advantage of what's happening on both sides. That way you can come out of crashes a financial winner. It's all about knowing what to do with your money when things are going up. That way you can take advantage of opportunities when things are coming down. And if you're looking for an easy way to up your financial education, well, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading your financial education emails by clicking the link up here or by clicking the link in the description below. And by the way, our financial education emails are different from our financial news emails. Prior to this whole 2020 economic crisis starting, one of the biggest bubbles we were seeing was the corporate debt bubble. We've been seeing historically low interest rates for about a decade now, so businesses could borrow money essentially for free, you know, that easy leverage thing I was talking about. Well, when you have all this leverage and you have all this extra cash, you need a place to put it. So then businesses would start investing their money. They would start buying back their own stock. They would invest into growth, even if they had no idea when this growth would be profitable, and they would invest into other companies. If you're subscribed to our YouTube channel, you might remember me talking about these startups that were getting these multi-billion-dollar valuations, even though they had no profits. They were burning cash and they had very low revenue because businesses just needed a place to throw all their money. And if you're not subscribed to our YouTube channel yet, you should do that. This easy leverage pushed the value of these cash burning companies through the roof, and it pushed the value of the stock market higher. No matter how crazy these valuations got, there was just no end. So people thought that this was normal. I mean, it got to the point where you had articles literally coming out telling people that you shouldn't be looking at valuations of companies anymore. And if you're looking at a company's profitability, you have no idea what you're doing. I mean, that's how crazy it got that people were just throwing all fundamentals out of the window. I mean, what kind of barbaric caveman would want to invest in a company that actually makes a profit? Huh, silly goose. I'll give you a personal example. So Minority Mindset is a financial news and education company, and we work with a lot of startups. And one startup came to us who was looking to go public, and they literally said, Jaspreet, we don't really care about making a profit right now. All we want to show is that we're getting more users, even if we're losing money in each user, because if we can show more users, then we can go to our investors and raise more money and get a higher valuation. So they didn't have any problem paying $3 to make $1 because they were sitting on all this cash that their investors kept giving them that they had to spend. And so they just wanted to show more users, because if they could show more users, they could make millions of dollars through a higher valuation and just raising more money. I have a slightly different philosophy, which is probably why we reject almost every single sponsorship offer that comes our way, because if you don't have an amazing product that won't give a lot of value to our fans and readers, we don't want to work with you. But this way of thinking wasn't an outlier. This was the way people thought about starting a business. Normally, when people think about entrepreneurship, you might think of a person who works hard to solve a problem. And if they can solve this problem for a lot of people, or it's a big problem, they'll be able to make a big profit because their product is very valuable. But over the last few years, the face of entrepreneurship started to change. Entrepreneurship was becoming more of a game on how to increase your value and raise more money than it was about actually solving a product. If you knew the right people and you spent your time studying how to make a good pitch instead of actually making a good product, you could walk away with millions of dollars even if you had a crappy product that didn't do anything. Remember, businesses and investment funds were sitting on so much cash because of this easy leverage that they just needed a place to throw this money. And come on what planet could a startup that doesn't make any money fail? So this bubble kept inflating, and normally a bubble pops when money starts to dry up, because you don't have enough cash to keep buying and supporting these high valuations and you hit a peak. Like, people don't want to pay $100,000 to buy one tulip bulb anymore, and that's what creates the crash. In 2020, this bubble popped because of an outside source, this pandemic, which came in like a needle and just poof, popped the bubble, and that's when all these financial issues got exposed. The interesting thing to think about is that if this pandemic didn't expose these financial issues, then this balloon or bubble would have probably gotten a whole lot bigger. But on the flip side, we're also trying to fix this bubble by doing the same things that caused this bubble to happen in the first place. Easy leverage and easy access to cash, because the government and the Fed are printing an unlimited amount of money just to patch up the bubble. That way we can keep this bubble okay until the next one, which will be whenever that is. This 2020 economic crash is nowhere near over, and every crash comes with opportunities, and we're gonna have another one. We don't know when, but it will happen again. But this is why financial education is so important. That way you can make the smartest decisions with your money and capitalize on whatever is happening around you instead of getting abused by it. And remember, if you want to up your financial education, we have a free ebook and emails in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about what you should be buying during this 2020 economic crash to build wealth, we already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.